I want to thank you for this opportunity and also thank the committee for bringing to the fore the subject of the international implications and U.S. foreign policy implications of U.S. energy exports. I would submit that our discussion on energy exports, in particular on LNG exports, has been too focused 100% on the domestic market consequences, whether that's a job consequence or a price consequence. And I believe that we need to not take these decisions in a vacuum, that the context of U.S. foreign policy needs to be taken into account in the discussion of our export policy for both natural gas and other products. The context is that for the last 3 decades, the United States has an active foreign policy to promote free trade, open trade in energy exports and investment. And that is important not only to the United States, but to the global economy. Why do we want free trade in energy? As has been mentioned by many of your committee members and by my fellow panelists, we have operating in the global market an effective oil cartel that keeps the price of oil much higher than it would be without those artificial restrictions. And those restrictions are developed through energy trade. So countries like the Middle East and so forth organize to restrict exports of oil or natural gas in a manner to raise the price internationally. And they also restrict open investment in oil and gas exploration. We send our diplomats to countries like Russia, China, and the Middle East to discuss with them having better and more open access rules for the investment in oil and gas. It is this lack of investment in oil and gas abroad in recent years that has caused us to have the kinds of financial crises that have revolved around sharp increases in energy prices that we saw not only in the 1970s, but also in 1990 when Iraq invaded Kuwait, also more recently in 2007 and 2008 when we saw energy prices hurt all businesses in our country, hurt American consumers, hurt average Americans. So it's important to have the United States have an open and assertive policy in trade policy globally, that we do not favor, that we promote free trade, that we object to restrictions in investments and trade in oil and gas. Because that's our standing foreign policy and an important foreign policy, because we don't want other countries that produce a lot of oil in the Middle East and other places to hold and restrict their exports. We cannot ourselves then have a policy where we choose to restrict our exports, because therefore we move into a world where energy becomes possibly a political weapon or an economic weapon, and that is not in the vital interests of the United States. The best way to prevent the kind of global imbalances in energy supply that affects our jobs and hurts every American is to have a policy, a foreign policy that promotes trade and open markets. If the United States doesn't have an open market policy, then we cannot advocate it for other countries. When we consider LNG exports, we need to put that export debate in the context of our own free trade agreements. Our free trade agreements have to be meaningful because otherwise why would anybody want to have economic agreements with the United States in important trade relations? We export natural gas to Mexico. Last year we exported 1.69 BCFD of natural gas to Mexico under the NAFTA agreement. That's an advantage of trade. We hold a free trade agreement with South Korea. South Korea would desire to buy liquid natural gas from the United States from the new proposed export terminal. We cannot supply natural gas under free trade agreement with Mexico and turn to South Korea and tell them that we're not going to honor our agreement with them. Once we honor our agreement with South Korea, how are we going to turn to Japan, a country that would like to buy our LNG exports, and tell them, even though they've been a staunch ally of the United States for decades, we're going to export our LNG to South Korea under a free trade agreement, but we're not going to provide these resources to Japan. So the best way to protect consumers from the kinds of seasonal problems that could erupt from having exports is to have a mandate for minimum inventories in the United States as they have in Europe and Japan.